Hi everyone, welcome and thank you for taking your time to join us for this morning webinar. My name is Evelyn, a member of the Singapore FinTech Association's Secretariat team. Today's webinar is part of our Grow Your Business series titled Digital Asset Operations, a Tactical Guide to Growing Your Business. In today's session, we have Rax Sondi, Managing Director of Independent Reserve Singapore, Raghav Sood, VP of Strategy at CoinHaku. And this session will be moderated by Stephen Richardson, Head of Apex, VP Product Strategy and Business Solutions at Fireblocks. If you have any questions during the presentation, please feel free to type them in the Q&A box located at your Zoom control panel below. It will be addressed during the presentation, and we will also have some time for Q&A at the end. So without further ado, I'll pass the time over to Stephen to kickstart today's webinar. Stephen, please.
Thanks, Evelyn, and thanks, Rakav and Rax for joining us today. I think we're very excited about the panel discussion, really kicking to two companies that have been licensed here in Singapore that are growing their businesses rapidly and thinking about all the challenges and the problems that go into starting a digital asset and growing a digital asset business here in the region. And so quickly, I wanted to have the panelists introduce themselves and talk a little bit more about what their companies are doing, and I'll give a little bit of an overview. So maybe we'll start with Rakav from CoinHaku.
Hey, thanks so much for the intro, Stephen. So CoinHaku is, of course, as I'm sure many of you are familiar, a homegrown digital asset service provider here in Singapore. We've been around since 2014, making us one of the oldest in the Asia region. And our key focus has been on providing simple and seamless access for the retail market to the digital economy and enabling us to be a gateway for the crypto economy right here in the region.
That's great, and appreciate the context there. And Rax, maybe a quick overview around Independent Reserve, and we'll jump into it for today.
Sure. Good morning and evening, depending on where you're calling in from. And first of all, thanks to the Singapore FinTech Association and Fireblocks for hosting the session, and to Raghav, my fellow panelists. For those of you who don't know us, Independent Reserve was actually founded in 2013 in Sydney, Australia, making us one of the more established exchanges in the region. We're number one in terms of volume trading in Australia and New Zealand, and we established the Singapore business in January of 2020. Independent Reserve was the first crypto exchange to be licensed by the MAS in October 2021 to provide access to crypto to all investors in Singapore. Our aim is to provide a secure, robust, and easy-to-use platform for the entire investment community.
That's great. And maybe, Rax, I'll start with you. Obviously, Independent Reserve was started in Australia in 2013, but you moved here to Singapore in 2020. How has that journey been going, and what really attracted you to moving here to Singapore?
Sure. So we were actually looking at multiple jurisdictions. The decision was made by the founding team that they wanted to expand the business because of what we've achieved in Australia and New Zealand. And multiple jurisdictions were being considered, but at the same time, MAS actually had announced the Payment Services Act and what they would be doing in terms of offering a framework to actually regulate cryptocurrency exchanges. MAS being one of the most renowned regulators out there, we took the opportunity to actually look into that in a bit more detail. And after doing so, we decided to actually set up our second office actually in Singapore. And that's one of the reasons sort of why we came here, because of the regulatory framework that was being proposed by the MAS. I mean, for those of you, we're a pro-regulatory firm. We like regulation. We like to work with regulators because that ensures that the people that we're working with are actually more confident and comfortable in terms of dealing with an exchange like ourselves. And there's several other factors as well. Singapore growing as a fintech hub with organizations, with the support of organizations such as the Singapore FinTech Association and also some of the crypto organizations over here as well. That drove us to actually consider Singapore as our second sort of office and our regional HQ for the Asia region.
No, that's amazing. And I think, maybe Rakav, for you, right? Obviously, Rax is bringing in a view of a company that was headquartered somewhere else and now is growing in Singapore. but you've been in Singapore since 2014, right? And so really, what has that journey been like for you in terms of the company starting an exchange here in Singapore and then moving as we've seen more folks come into the space? What has that been? What has that journey been for CoinHacko?
I think it's really been quite cyclical. So when we started out in 2014, even just buying Bitcoin was incredibly difficult. You had to go to like OTC desks, hand over a bunch of cash. The rates were terrible. They were like 5 to 10% off market. And as that matured throughout 2016 through 2018, when we saw the last cycle take place, that's when a lot of the retail interest came in and a lot of retail education took place. And we saw people slowly getting more sophisticated, getting a better understanding that crypto is not just an asset class, it's an entire digital economy. We had the whole DeFi and the initial NFT run-ups come in. And we're seeing a repeat of that same cycle this time around, but more with institutional investors. So whereas last time we had a lot more retail guys coming in for the first time, this cycle there's been a huge boost in institutional demand. The asset class has matured. There's been a handful of established firms and investors advocating and allocating a portion of their treasury towards crypto. We're seeing more and more asset managers who are keen to learn more about this space, but they just don't know where to get started. It's a huge jump to move from trading traditional assets to coming into the world of crypto, where even things like custody are no longer as simple as just choosing one company to work with. So that was the main motivation for us launching the CoinHacko Privé line of the business, which really focuses on making sure that as an institutional investor, you get the right support, the right advice. We can help you avoid the pitfalls and really help you through that learning journey. And it highlights how education is key, because we've been able to convince many of these asset managers to come on board and take their first steps into crypto by basically ensuring that they don't have to worry about the nuances and the niche difficulties associated with the crypto economy. They can come to us and they can use our custody solution, in part backed by Fireblocks, to basically make sure that from their perspective, they're trading it like any other asset. And whenever they're ready to take the next steps beyond just trading it like an asset, when they want to get into DeFi, when they want to get into NFTs, we have the right tooling and the right systems in place to make sure they're not leaving value on the table. And we're able to guide them through this process. So that's really what the journey has been like for us. And just one last point there is, it is important to be regulated. You don't want to get into this space and just offer everything. So regulation and education really do go hand in hand here, which is what makes Singapore such a strong place to build a base on. And one of the main reasons why we've been focused here for the last 8 years, rather than just branching out like many others in the region have done.
Yeah, I think you mentioned regulation, right? And both of you have gotten our license here in Singapore. And I think for a lot of folks, as you think about digital asset businesses and globally, you're seeing a lot of exchanges really focus on licensing and regulation as a mechanism to really solidify their businesses within jurisdictions. I think everyone is fully aware, right? It was quite with new regulation and kind of new regimes. There's always a challenge in really being able to get those licenses and work with the regulators to do so in a really efficient way. I'm sure folks have seen, there's a lot of questions around what were the right things to do. How are some people getting the licenses and some others are not? How were you guys able to, one, work with the regulators and build programs to get the licenses so quickly? Obviously, Independent Reserve in 2021 and now CoinHacko in this year. What things did you have to do, and what were the important aspects that you guys were paying attention to and really highlighting to the regulators as you built this application in front of MAS?
Sure. I mean, I'll go first if you like. So we've always operated the business in Australia as we were being sort of regulated by ASIC. We are not regulated by ASIC, which is the MAS equivalent. We've tried to get a license from them. However, the building blocks of the business and the organization was as if we were regulated, and we followed the ASIC protocols and procedures, if you like, in Australia. Someday wishing that they would actually start regulating cryptocurrencies, crypto exchanges, and we'd be one of the ones that would actually apply for the license. So for us, actually having all those processes and procedures and policies in place, and also the key people, and those were the people supporting the Singapore business as well, in terms of those policies and procedures we put in place in Singapore. For us, it wasn't too much of a strenuous task, to be honest, to actually meet the MAS requirements. Of course, there were some differences in terms of what we had to do in Singapore versus what we had to do in Australia, or what we were doing in Australia, and one of them being the travel rule. And I think this has come up a lot with a lot of organizations in terms of how to deal with the travel rule. So that's something that we actually had to accommodate from scratch. But we kind of had an understanding what we'd be doing there. So we didn't start from ground zero, if that makes sense. We had a base. And in terms of working with the MAS, we thought of it very much as an educational process as well. We know it's a new, I've got licenses before in Singapore. I helped get licenses before in Singapore for other organizations. And with this being a brand new framework with no one having experience of this, we treated it like an education process, to be honest with you, to educate the MAS in terms of exactly what our business model is and how these regulations or guidelines impact our business, and actually go through them with them step by step. So when there was a query on a particular thing, we'd explain how we were doing it, why we're doing it this way, and actually how it impacts everything else that we do within the exchange as well. So that's actually how we worked with the MAS through this process. More of a sort of like an education process for both sides.
Makes sense. Rakav?
Yeah, I think Rux really hit it spot on. Even for us, even back all the way in 2014, when there were really no KYC or regulatory requirements, everyone was just doing it just plain OTC. We were one of the first in Singapore to even come out with a basic KYC flow, even without there being an explicit regulatory requirement for it. So I think things like that, where from day one, we've had a compliance and regulatory first approach, even when things were less restrictive. We've always refused to list assets that have like Ponzi style mechanics or things like that. Because at the end of the day, we are primarily a retail focused organization. So we want to make sure that the services we offer to our users are, as far as crypto services go, considered safe and sound. And I think that's something that MAS has recognized by putting us in the first group of the license providers here. And the other part here, I would say, is really operational efficiency, because we've seen a lot of platforms just collapse under the surge of growth the space has gone through in the last couple of years. So being able to show to the regulators that you're able to deal with spikes where in a day you're serving 1,000, 2,000% of your typical traffic and volume without losing sight of the clients, without running into major operational difficulties, and ensuring that if they grant you a license, people can trust that their funds and their trades and their decisions are safe with you. That's what really sets us apart. And I think we've also taken a number of steps to drive education and exposure to the broader space within the region. So last year we hosted Right Click Plus Save, which was touching our toes into the NFT space, getting a sense of how the market feels about it. We formed partnerships with folks like Fireblocks, who again bring in years of custody experience, again highlighting to the regulators that we're not just doing everything ourselves, we're leaning upon the industry, working with the best folks in the industry to make sure that the services we offer to our users really meet the standards of what a licensed provider should be providing, and that they would not be making a hasty decision or an incomplete decision by choosing to trust brands like CoinHako or Independent Reserve with the first groups of licenses.
You actually make a really good point there, Raghav, with regards to actually leaning on other industry leaders in their space on terms of their technology. So we're at Independent Reserve, our core technology is 100% proprietary, but we would lean on organizations such as Fireblocks, who are number one in their space as well, that have proven that they've got robustness and resilience that can actually work with organizations like us as well to provide the services that we need as well, as opposed to having to go to the drawing board and doing that ourselves when we know there is an organization there that actually is trusted that we can use as well. And that's very key as well, actually.
Yeah, I think you raise a great point, and I think for me that's a segue into kind of our broader next question, right? And this market, right, is a growing one. We've seen a shift from retail to institutional. We've seen the proliferation of multiple different tokens, multiple different blockchains, multiple different products within the space. I mean, we've just seen kind of a massive amount of growth. And one of the questions, I think when I first came to Singapore 2 years ago, and then as the licensing structure was being brought out, was what kind of operations need to really be in place in a net new industry and a net new set of functions with net new products, right, to basically ensure or give confidence to the regulators that, in essence, customer funds are safe. There's no broader systemic risk to, the ecosystem or to, other operators here in Singapore. How did you guys think about this operations, component, right, within the organization and around things like security on your end? I think a lot of people, as they're thinking about building or going for these licenses or building digital asset businesses, this operations and security question is probably one of the biggest ones that they have.
Yeah, I can start for that first. So I think just quite simply, it's something you can't ignore. If you have users trusting you with their funds, security is one thing you just cannot compromise on. You don't get a choice here. And to that end, of course, the base given is we comply with MAS's technology risk management guidelines. We follow all the industry best standards around hot, warm, and cold wallets. We make sure that our funds are always safe. We're not putting them to unnecessary risk. We internally have many cybersecurity trainings for employees to reduce the risk of any internal threats. But at the end of the day, it's really something that has to be baked into the organization, not just at an operational level, even at a product level. So very simple things like having proper transaction monitoring in place has enabled us to catch and work closely with the Singapore Police Anti-Scam Center on a lot of these scams, which, I mean, from a purely logical perspective, you could argue this is not a security issue if there's an account takeover which the user cooperated in. But at the end of the day, this is something which in many cases is predictable and is detectable. And as an exchange, especially serving retail, I would say it's your duty to take steps to mitigate these where possible. So just this year, we've been able to save close to $1 million in user funds by working with the ASC. And then you have the whole technological side of things. Of course, solutions like Fireblocks provide a lot more guarantees in terms of security. You can avoid single points of failures, which we've seen with many key holders at other exchanges in the past, where if one guy's on a plane, withdrawals just stop. Those kind of things and those kind of setups, I would say, give a false sense of security. Whereas for us, we work from day one, whenever we're designing something, to make sure there's no single point of failure. We've covered all of the bases. We've covered it from the user's perspective, the organization's perspective, as well as making sure we meet all of the requirements that are actually required by the regulators in the various notices and guidelines.
I don't think I could have actually put it any better than that, to be honest with you. Thank you, Rangan. You've answered for me as well. I mean, one thing I will probably make a couple of notes on is obviously the cold storage side of things as well. We take that very seriously. I think 96% of all our assets are actually in cold storage, and that's, when I say cold storage, that's in 2 physical vaults. So we take that obviously very seriously. We've actually had no breaches in our since 2013, since we launched at Independent Reserve, and we go a step further as well. I mean, we're ISO 20071 compliant as well on the security side of things. We awarded that earlier on this year as well. So I mean, it's whatever we can. I mean, we're quite confident and comfortable with the security that we offer, and that's when we bring in external parties to actually verify that. And so I think that's quite key as well on that side there as well. But I think you hit the nail on the head there, Ravi. Thank you.
Yeah, I mean, I think obviously you guys are pointing to the frameworks of things that are being done right, and that's why you guys are a part of this first group. But we know, I think there were 200 firms that started on this DPT license list. I think there's 11 in principal type approvals. I think that at the latest count. I'm going to ask you a bit of a challenging question. You know, you can be politically correct if you want to, but what do you think other people are doing wrong, right? I mean, if you think about, institutions like yourselves, you guys have been in existence, you guys have worked within frameworks from places like Australia, you've done, KYT and or KYC and other things ahead of the curve. People would anticipate that there is a general framework that you can go into to manage a successful and regulatorily compliant business. Same from operations and security side, but we haven't seen kind of like the growth in the licensing as we've seen. There might be other reasons, but what do you think are some of the challenges that other folks are facing, or some of the things that right now you think, as you look at this space and as you look at potentially competitors in the space, people are getting wrong, and that's leading to kind of some of the outcomes that we're seeing from a licensing perspective?
Yeah, that is a challenging question. I mean, as we've mentioned before, we're old exchanges, if you like, compared to the other exchanges, both Independent Reserve and CoinHacker. When I say old, I mean more established in the sense that we've been operating since 2013 and 2014, respectively. We've had a lot of experience in actually building out our exchanges and getting things right during that period of time when we've been there and operational. And as things come out or challenges we face, we challenge them on that side. I think with some of the newer exchanges that have never sort of operated in any kind of regulated environment, or when I say that, or actually have operated as if they were being regulated, I should say, I think that's posed a challenge to some of these newer organizations. More so, maybe not so much on the security, because I can't comment on that, because I speak to a lot of the exchanges, and I'm sure Raghav does as well. I think some of the exchanges actually, when it's come to the licensing side of it, have just needed to understand their implementation of how the travel rule would work. And I think that's been quite key for MAS in terms of being able to prove and show that you actually have a solution in place for travel rule. And I think some exchanges have taken sort of some time, because travel rule, I mean, Korea is probably the first market that's gone live in, like fully fledged. So to what extent is it going to go live in other jurisdictions, and what time frame as well? Because at the moment we're kind of just following the sun. It's like we go first, and we've got our implementations, both CoinHacker and Independent Reserve. But I think other exchanges just need a little bit more help on that, or they're waiting for it as well, I'd say.
Yeah. Just to add on to that, I think travel rule has highlighted some of the gaps in security across the industry, because at least for CoinHacker and I somewhat assume for Independent Reserve as well, simply the fact that we started so early means that we predate most of the custody providers and the off-the-shelf solutions people see today. Most of these guys were not around in 2013 and 2014. So by default, we ended up building our own custody systems, which means in-house, there is a lot of expertise around how crypto transactions work, what the possible attack modes are, what the possible structures are. And that enables us to put together a more comprehensive solution on anything involving crypto transactions, whether it's security, whether it's travel rule, whether it's KYT, where some of the other more recent players we've seen in the industry, they get the product and the operations side right, but they end up with things like single points of failures on their custody solution, or even if their custody is built correctly, their tooling is not, and they end up being susceptible to phishing attacks or things along those lines, where even though there's no key compromise, they are able to sneak past and get incorrect transactions signed by taking over the signing tooling or something along those lines. So there are some, I would not say they're necessarily wrong. I think anybody in security will tell you it's impossible to cover all your bases all of the time. I think what's key is, as a crypto service provider, to have the expertise and the insights in-house to really evaluate that, whether you're building something yourself or whether you're working with an industry partner, whether you're really covering all of your bases, whether it's going to meet the regulatory requirements, whether it's going to actually keep your users' funds safe, and whether it's something that can keep up with the operational requirements of the expectation that you're going to be processing deposits and withdrawals 24/7, 365 days a year, which is, I think, something that's quite unique to crypto as well. And a bit unusual for people coming from the TradFi space.
Yeah, I think that's a spot on point. I think, from Fireblock's perspective, when we work with banks, right, one can look at kind of some of the broader launches of banks into the crypto space. This first idea of 24/7, 365 deposits and withdrawals in close to real time is something that I think I think scrambles a lot of minds, right? And how you do that with high levels of automation, with high levels of security. I think, from a technology provider perspective, such as Fireblocks, we were thinking through what are all the different attack vectors that people face, right? How do they mitigate those? How do you, secure and harden your policy engine? How do you secure and harden your whitelisting database? How do you build a network to enable easier point-to-point transfers? Those are those type of things that not, to Rakav's point, you might get the custody part correct. You can put it very safely. You can have the right controls. You can have, the tightest HSMs or cloud infrastructure, but really a lot of these operational elements and the ancillary components around those become things to really think about. So, great point there. I'm going to ask a question that, it wasn't on the list, but really I think maybe a helpful one is, you guys talked about the travel rule. And I think for a lot of folks, if you're not familiar, it's this idea really around transferring as a virtual asset service provider information on recipients of digital asset transaction, where you're sending on behalf of your customer, right? That context and information of the transfer. It's a new concept in digital assets. And I guess to your point, right, it's been a struggle for newer folks that are entering the space. It's been a struggle for banks that are used to this in traditional assets to think about how they do it. Do you guys feel like there needs to be more collaboration in the space on this? I know there were two different working groups that were created before, one primarily in the US, one primarily in around the world. We're seeing Germany potentially take a look at kind of issuing its own. Rax, you mentioned Korea. What does the digital asset space, or what do digital asset infrastructure or providers like yourself need to do to make it a little bit easier, and mitigate some of the challenge around things like travel rule in the space?
I suppose we can't do anything to mitigate per se, because it's a rule set by the MAS that we have to comply with. There are obviously jurisdictions that we deal with that don't actually that are not live with travel rule, so that business can sort of go on as it is. But when we're looking at actually working and assets being transferred, digital assets being transferred within Singapore from exchange to exchange, then we need to make sure, and we need to see that actual interoperability layer actually does work by the providers as well. I mean, our provider, it works for us. We've done some testing with some other exchanges actually as well, whilst they were actually going through the licensing procedure, because we've been live for quite some time with that. But it's we do have a working group, I believe, in Singapore. I'm just trying to remember which of the 3 associations is leading that, but there is one that we do sort of catch up on occasion and talk about it. But there needs to be more work done on this, without a doubt. I mean, yeah, there needs to be more work done on this, and sort of more knowledge shared about the implementation side of it, and what do you do if the exchange that you're dealing with actually is not subjected to travel rule, or what if you are actually transferring from unhosted wallets that are in Singapore to a Singapore exchange that actually does have to comply with the travel rule. So there's all these kind of questions out there. I mean, we've obviously accommodated for those, both Independent Reserve and CoinHacker, because we have our licenses on that side, and travel rule actually is quite a big part of actually making the MAS feel comfortable with the way that you are actually processing and able to transfer digital assets as well.
Yeah, just to add on to it, I think as far as collaboration goes, and this is not crypto specific. We've seen similar parallels in the banking industry when the travel rule was introduced over there, as well as outside of finance in working groups that were trying to settle on things like how internet protocols, etc., would work. There would usually be a handful at the start, and then eventually they converge towards a similar set of standards before one sort of becomes interoperable or takes lead. But I think just one or 2 points here. Singapore is, of course, as Rex mentioned, one of the first jurisdictions to really enforce this at a regulatory level, which may seem a little disadvantageous to us now, but really puts us in a stronger position in the future, because this is coming around the world, whether people like it or not. And being there at the forefront, being able to work with all of these working groups, test on a live environment with live users, getting our own users educated on how all of this works, how they can complete ownership tests for their unhosted wallets, how they can transact with other compliant exchanges, is really important, because when this becomes a thing all around the world, users in Singapore will have already been through this. They will already be in a position to move faster. And beyond that, it's really just user education to an extent. I think one thing that both of us may have seen, being a retail platform, a lot of users are just quite comfortable leaving their assets with you. They don't transfer out or in too much. I mean, there's a small segment of users who do it a lot, but quite a few do it very infrequently. So changes like the travel rule disproportionately affect the latter group, because they're not as familiar with crypto transactions. They're not as familiar with things like Bitcoin wallets giving you a new address for every transaction. This gives us an opportunity to educate users about the broader crypto space, introduce them to new concepts. And while that has a cost now, purely from a growth perspective, that's super important. Getting your user base deeper and more familiar with crypto is what will lead to growth in the long run. If that education has to come on the back of travel rule, I think that's fine. I think that's still a better position than to be in a scenario where Singapore says no crypto withdrawals at all. It's a closed loop. I think the fact that we are in a position where we can still interoperate with the wider crypto economy, and just have to educate users on the right way to do it, is still a very strong ground, even against the backdrop of.
That makes a lot of sense, and I appreciate the context. I put you guys on the spot with that newer question, but I think, you know, for folks that have been thinking around and being asked questions around the travel rule, to get insight from the both of you is extremely helpful. So look, can't have a panel over the last 2 weeks without talking about general volatility of the market, and with things that have happened with Terra, and in general, just what we're seeing, right? And a lot of the activity. I think when you see volatility in the market, you think about operational scalability, you think about robustness of your platforms and all the infrastructure around that. How do you guys as leading exchanges approach this type of scalability of your operations, as well as that operational infrastructure to support both, growth and demand in the good times, but in times where there's a lot of volatility and shakiness in the market, the demands that go on your platforms for things like withdrawals and deposits and just even like the broader platform and central limit order books and all those different things. Like, how are you thinking about that from an operations standpoint in terms of broader scalability?
So I think Luna and Terra are really a good way to highlight the opportunity and the benefits of planning ahead. So as an exchange who's been around since 2014, we've seen projects implode before. It's never happened to an asset we listed, but until the last couple of weeks. But it is something we knew is possible, and that means it's something we can plan for. So we have put in effort to ensure our operational tooling internally. When we design our listing systems, our trading features, our wallet features, we build in the controls enabling us to pause partial support depending on how the market is going. We don't know which asset we're going to need it for, but just having that ability means you're not scrambling at the last minute when something like this happens. It also means that this is something we can train our operations team for. We have guides, we have playbooks on how to deal with volatility, how to deal with network stoppages on a blockchain, how to deal with users asking about things like, oh, is there going to be an airdrop? Is there going to be a fork? This means your operations team has to know what an airdrop and what a fork is. They shouldn't be escalating this to your crypto teams. This kind of knowledge is something you build as a company and as an organization. And it's important to make sure that the people on the ground who are talking to users are able to hold these conversations, because that's really the only way to scale. We can't be escalating every inquiry and every ticket right up to the engineers working on these projects. And coming on the broader side, I think, again, I keep coming back to education because that's really what it is. For a lot of people, including much of our user base, they only joined crypto in the last 18 months or so. So this is the first time they have seen something like this, where a multi-billion-dollar ecosystem practically evaporates overnight. Many people have heard that this is possible, but this is the first time they've actually seen it. And I think we've seen examples of this where even many crypto companies just assumed that Anchor was infallible, and that they could rely on those yields to prop up yields on other assets. Even though logically we know that a black swan event is possible, just seeing it happen in front of them is, I think, something that's quite important and quite new to much of this user base. And as an organization, as a service provider to these guys, we want to make sure we can educate and highlight that this is the exception, not the norm for crypto. That the industry is very mature compared to where we were years ago, and that the majority of the assets, majority of the projects are unlikely to bear this level of risk, and that they should be prepared to make their own decisions. And as a service provider, we should be prepared to provide them with the right information to make these decisions. So I think it's a mix of both internal training as well as the kind of material and the kind of access you grant to your users. And it goes hand in hand with making sure that when things happen, they happen in a manageable and a containable sort of.
Yeah, no, that's a nice, very nice little summary there as well. And I agree with you 100% on that. I mean, just sort of touching on the scalability of things as well in terms of our ops teams and ops process and procedures. I mean, both of our organizations have been through 2 cycles now as well, where we've been at the extreme sides of the price volatility on that side, and where we've seen volumes, well, quite substantial volumes basically, because we're obviously volatility hits us on that side there. And we've been able to cope with that. We've got the technology, the processes, the systems, and the people in place. So if we're going through those cycles again, we can actually handle those on that side there.
Yeah, I think that's, I think that's the really interesting thing, right? I mean, with such market movement, right, such uncertainty, I think the number of crypto or digital asset exchanges that were able to maintain operations at, high SLAs and high functionality, I think, was impressive. I think if you've been in the crypto space, I've been in since 2016, and when we saw huge market drops like this, a lot of the infrastructure at that time was not equipped to manage that kind of volatility. And you saw a lot of real problems. And I think one of the things is people were able to get in and out of positions quite seamlessly. They were able to manage, forks of the different assets in quite seamless ways. So obviously kudos to folks like yourselves that are thinking through the broader planning and getting teams ready to be able to service that.
But that's another reason as well why we actually look to see where we've been doing this all proprietary, sort of in-house before, and then we look out to see and see what other organizations are out there actually that can help us. And I mean, it's 5 blocks. Obviously, we're both CoinArco and both Independent Reserve, where we're live on 5 blocks, and we're using your solutions as in terms of a transport for mainly our institutional funds and hedge fund clients, if you like, to their custodians, etc. But I mean, all of that would have had to be very, very manual back then, with eyes on that, with obviously alerts in terms of there's a delay for seeing it on the blockchain, and we're not seeing anything progress through that. But it's solutions like yours that actually make it a lot easier for us to actually now monitor this and monitor it from one screen as well.
Yeah, I appreciate that. And I think obviously, we focus on the infrastructure side, obviously, as you do as well, but that's our bread and butter. And so, for us, it's helpful to be able to work with folks like yourselves. I think one thing people are thinking about, we've talked about operations as a basis of licensing. We talked about operations as a basis of scalability. I think one thing people are thinking about as they launch new digital asset businesses is when they launch new products and services, either to institutions or to retail, right? And thinking through, one, in a highly competitive market, right? As we see new players emerge, as we've seen the growth of DeFi, all these different components, you guys are thinking about new products and services that capture not only the attention, but have utility to your customers. How does operations play into that, right? And how do you build, let's say, the product development capabilities or the product development approach to really incorporate, a lot of the foundational elements that we talked about earlier?
Please.
Yeah, so I think operations is a broad term. So when we build products, I mean, we don't just want to go out there and offer something that's already on the market unless we can make sure our users are getting actual value out of what we're offering. We've always been more than supportive of users going to other platforms to access services and products that we don't deliver ourselves. For us, it comes down to making sure what we offer is offered right. And that means not just operations on the user side. Of course, users who ask for support should get the right support, the right answers in a reasonable amount of time, but also operating on the back office side. So just for example, we're able to offer incredibly good pricing for SGD pairings, even though most of crypto is traded in USD. Because of the relations we have with TradFi partners, banks, as well as our own market makers and liquidity providers. But FX markets don't trade 365 days a week. So that means operationally, our team needs to be able to cover and extend that risk, manage it across the periods when the FX market is closed. Because as a provider, we don't want our spreads to shoot up over the weekend. We want to be able to offer consistently good pricing to our users, regardless of whether they're trading $10 or $1 million, regardless of they're trading Monday morning or Saturday evening. So those kind of considerations, it's really a matter of finding the gaps in how crypto intersects both with the TradFi world as well as the user's own understanding, and finding ways to cover those gaps and make sure that from a user's perspective, when they want to do something, it just works. Building a product, I would say, is equal parts actually building the product and then making sure it operates as intended at every level of the flow.
Awesome. And I guess pushing on that, right, we got a question from the group. What new products are you guys thinking about, or what products are you excited about having recently launched here in Singapore?
I can't tell you that. I'll be giving away a little a roadmap to our competitors on this.
Well, why don't we talk about what products are you excited about recently launched that you're quite excited about?
So there's, I mean, with this, Stephen, we have some limitations in our space in terms of what we're actually able to offer because of the licensing regime that we're under. And that is something that we are working with the regulators on, and it's pretty much just, I mean, some areas are quite grey and vague, and I'm sure we're all moving in that direction. And like, I won't go into that on this, but I'm sure I'll speak to Raghav about this afterwards. But there are some products that are in the pipeline that we are hoping to offer to our clients in Singapore, depending or subject to MAS approval. So there are a few things in the pipeline. Hopefully as early as in 2 months, we'll be able to offer one of those out, and then another one the following month. I can't really go into too much detail on that, but we are always working on what can we offer to the consumers, just basic clients of Independent Reserve. I mean, some products may get launched in Australia sooner, and then obviously follow in Singapore, subject to regulatory approval over here. And that's something we have to be very wary of as being regulated exchanges, both Independent Reserve and CoinHarco. We need to operate within those parameters that the MAS has set to us, and make sure that they're comfortable with the products that we want to offer to our consumer base over here. And whether that's retail or whether that's institutional wholesale side, we still need to go through this process with the MAS when we're launching new products if it's not very clear where it stands.
Yeah, I think once again, Rux hit it on the head. Operating in Singapore, we want to make sure what we offer is sustainable and under the purview and under the framework that the regulators have set up. We don't want to release products and then have to claw them back a month later because we didn't take into account parts of the framework. As for the products or space itself, I think it's still very dynamic. It's crypto after all. I can't really put out a multi-year roadmap here. Things change every 6 months. But we are seeing a lot more focus from our users and our clients on the institutional and retail side for things like yields. So we do have CoinHarco Earn, which came up recently. And that is something we're going to be expanding to a lot more assets and a lot more yield types. But beyond that, it's a rapidly growing space. We'll offer whatever makes sense under the regulatory framework and creates real value for our users without really trying to get caught up in the hype of always offering the latest thing just because that's what the current demand asks for.
Makes a lot of sense. I think maybe we'll step a little bit further afield at a global level, right? You know, what are some of the trends, at least, that you guys are paying attention to, right? Or both from a digital asset, let's say crypto perspective, could be regulatory, that might impact, or that you're paying attention to, that will impact your operations here in Singapore, and kind of, you know, would be helpful framing for kind of why those things are important and potential impacts that you guys see.
Sure. So,
Go ahead.
I mean, there's a couple of things on that. I mean, and one obviously, as you mentioned, is sort of from global perspective is that the various regulators in different jurisdictions are now becoming a little bit more crypto friendly, and you see that there's jurisdictions such as UAE, which has 3 regulators there now as well, that are trying to entice more crypto firms out there. And you've seen people like FTX and Binance set out over there. You've got France now, which are sort of trying to wean people across into that jurisdiction there as well. I think we just need to keep an eye on what's going on in those spaces. From our perspective, we're always looking to grow our business as well, but we take a very, very sort of deep dive into what jurisdiction we think is going to be right for our organization to grow, and that actually will complement as well the other jurisdictions that we're based in as well. So that's one thing we're looking at. And when we've talked about institutional adoption, like everyone's been talking about that everywhere, every jurisdiction, if you like. But I mean, that's still as part of this sort of this webinar. It's very key, and it's also with a lot more firms that are actually. There are a lot more firms actually moving or opening up here in Singapore as well, even though there's some that are sort of opening up secondary offices or relocating altogether to UAE. We are seeing an influx of organizations into Singapore on the institutional side and the fund side as well, that we're looking forward to servicing from over here as well.
Yeah, I think Rex covered the regulatory landscape as well as the flow of new projects where they're setting up, where innovation is what we got to keep an eye on. Just to quickly add on to that, just one thing I think that's super important for the next couple of quarters or even years is I think pretty much every regulator has realized that this space is here to stay. And what's key now is that some regulators are seeing how it can integrate into the TradFi space. So MAS just recently announced Project Guardian, where they're working with a number of both TradFi as well as crypto partners to find out how practical and how plausible it is to actually start tokenizing traditional assets. And allowing them to tap onto the liquidity and the benefits offered by the crypto economy. And I think projects like this, whether it's done by a regulator or whether it's a tokenization effort by things such as one of our interest companies, Go Museum, which does tokenization of art, is that it's really what bridges a gap from the physical real world space over to the blockchain. If we're in a position where we start seeing tokenized real world real estate or tokenized real world assets backed and supported by a competent regulatory authority, such as under Project Guardian, that's something that will really be a next step for the crypto economy, because you're immediately able to tap onto an entire ecosystem where things like AMMs and Uniswap are just not possible in the TradFi space, but you can bring in things from the TradFi space and allow them to tap onto these innovations through a proper tokenization channel. So I think as the gaps between crypto and the traditional space narrow and more of these efforts pop up a lot across the globe, we'll start seeing a much more connected global economy. And we'll start moving more towards an economy where everything is accessible in a trusted and safe manner, without having to go to the traditional hoops of working with limited counterparties or working with only a certain vendor or a certain provider for certain kinds of instruments or assets. And that will really create a new cycle in the value that people are getting out of these kind of systems.
No, that's fantastic, and I think, look, from let's say an infrastructure provider approach, we're seeing regulation, come up in places like Australia. Obviously, there's kind of more consultation that's happening in Singapore. I mean, one of the things we find that's being interesting is, obviously a lot of attention is being paid to things like self-hosted wallets and direct custody, and really there's a lot of attention being paid to things like qualified custodial status and what does that mean? And in digital assets, is it more of an operational framework or a capital framework? Like, so I think that will be a very interesting thing. I think there's a lot of, if you look at what's happening within places like Australia, there's really interesting approaches that are being suggested in terms of like the broader licensing and kind of like the technology approach that needs to be taken to safeguarding digital assets. And I think, you know, places like BaFin in Germany are also thinking quite uniquely around this whole thing. So, you know, for us, I think as we think about broadly in APAC, Singapore tends to be quite a leader from a regulatory perspective. So it'll be interesting to see how kind of the broader consultations that are coming out and what's happening in Australia and Europe from a custody perspective will impact, you know, qualified custody status and other things here, potentially here in Singapore. Now, look, we started this whole three-part series around what's the right infrastructure for launching a digital asset business. We went into kind of more the product side in the session 2, and in session 3, a lot of folks are actually going through this process of applying for their digital asset and crypto products licenses. They're building new services and they're starting here, right? And you guys have actually done this. And so that's why we wanted to kind of close out this three-part series with folks that have actually gone through this process and successfully launched. I guess one quick word from each of you on kind of best advice you would give to everyone on the call as we wrap up, as they're going through this process. Rax, I'll start with you maybe.
Take anti-anxiety pills. Sorry. I mean, just be aware of everything that's going on and the changes in the environment. I mean, the framework is there, and there's not been many changes to that, but the actual environment and the ecosystem in Singapore is growing at such a large pace now. Just stay tuned to that and see which partners can actually help you out in building up your business if you are a new organization over here. And like sort of Raghav and our businesses have been established for some time, but there are some good solution providers out there that you can get going with from the start of it. Yeah, stay in touch and in tune with the ecosystem that's being built out in Singapore, because it's growing by the day over there.
Awesome. Raghav.
Yeah, I think that's spot on. I mean, especially when working with regulators, applying for licenses, being part of the ecosystem is super important, especially for things like travel rule. This is not something you could get done alone. You have to work with the broader ecosystem. You have to be aware of what's going on. And that's what really matters in really proving that you're not applying for a license just for the sake of it. You actually understand the space, and that you will be able to keep up with the kind of crises and the kind of velocity the space offers. If there's no confidence in that, then maybe it's good, like Rex mentioned, to work with the leading partners, whether it's Fireblocks for custody, whether it's other partners for trading solutions or KYC or whatever else. You have to make sure that the services you offer meet the standards and are able to keep up with the rest of the space.
And get involved. Don't be shy to ask questions with contacts at Singapore FinTech Association or Access or Blockchain Association of Singapore. They're three key associations that we all turn to, and we all work very, very closely together with. And that's together as like all of us, or we work individually with those associations as well. So they're at your disposal.
Awesome. Well, I want to thank Rax from Independent Reserve, Raghav from CoinHacko for joining us on this panel. I also want to thank the Singapore FinTech Association and Hong Kong FinTech Association for hosting this three-part series. Hopefully you guys found it helpful to hear from leading providers in the space, offering services both from the retail and institutional side that have been licensed in Singapore around their journey and the process and the things that they're thinking about. So thank you again for joining us today, and this will be recorded for you to listen to after it's done.
Thank you.